I think particularly in the environment that we're in today, related to deal making, I'll call it, there's a frenzied kind of atmosphere in terms of the deal markets. Valuations are relatively high. It's really a seller's market, and I think as a buyer, you've got to be very calculated and very selective about the types of deals that you want to go after. Because of the sheer fact that valuations are very high, there's embedded risk when you end up buying, let's say, a little bit higher than where you would maybe historically be at. And I think, so the biggest advice that I think we follow ourselves, or I could give to others, is that, what is that organization that you're going after really going to do for your company? What is it going to advance for you? And I think as a strategic buyer, that should be really well thought out and even committed to writing. And I think if you have your core strategy settled, and as important for a business leader, it's actually well understood broadly in your organization, deals almost naturally happen. Now, with that being said, for us, at Transtar, what we're trying to do in the environment we're in is really try to get involved earlier in transactions. So I think the formal term for it is developing proprietary deal flow, basically engaging business owners, maybe even before they're even thinking about selling. And I think that's been a real critical focus as well as success point for us. Well, I think for us, as business owners ourselves and as entrepreneurs, and particularly as a strategic buyer, our benefit, let's say, is we've been in those shoes. We've sold our business. We've sold family businesses on our end before. And so I think having a firm understanding that when a business owner is selling a company, sure, the dollars and cents matter, but it's an emotional experience. And I think our starting point actually is just getting to know people. Establishing relationships, really understanding the business owner, not just with respect to why they're selling a company, but really what's motivated them basically to create their organization for those that are actually entrepreneurs that establish these companies. And really it's about getting to know them as individuals. And I think we spend a fair amount of time on that part of the process in the front end. And I think that helps us fundamentally gain trust, and in many ways, the business owner is really getting to know us as well, and that's a very important part of the process. Market share is important when you look at an organization. What's probably more critical is how you define market share within a company that you're evaluating. I tend to think that within a larger market, there's actually micro markets. And so I think typically what we see when we're in processes, let's say, that are formally sponsored, the market tends to be positioned as very broad and very, very large. And I think the most important thing to do when you're diligencing an organization is really, truly understanding how it's positioned within what I'll call its micro market. And I think that may reveal certain characteristics of the organization, both positively and negatively, that'll help shape your decision ultimately whether or not you're going to acquire the company. Sure. So there's a few takeaways that perhaps I would provide to folks that are interested in buying businesses. And I think the first for me and for us from experience is, buying companies is a team sport. It's not an individual sport. So surround yourself with really good folks, whether it's advisors, whether it's other people that you trust through your network, to really help diligence an organization. I think that's critical. I think multi-points of view are pretty important when you're looking at an organization. I think second, while of course it's very critical to have great diligence, quality of earnings, and all the formal diligence processes that folks go through, it's equally as important to really understand a company and to keep in mind that the goal isn't to deliver an asset purchase agreement or a stock purchase agreement. The goal really is to buy the organization, and really taking a look at the long-term view of a company, how it's positioned not only today but into the distant future is critical. And third, certainly last but not least, it's really understanding the management team, understanding the culture of a company. It's amazing what I think you could engage and maybe extract out of just spending more time than maybe you conventionally would have thought of in a deal process with business leaders within an organization, or having a meal with, let's say, the CEO of the company, and really see and evaluate their body language and their level of enthusiasm when they speak of the company.